I think what we're seeing here is that the issue that the investors are facing in property, in real estate, it can differ depending upon one's time horizon, right? So real estate becomes a catch-all definition for a number of different aspects of the asset class. For us, we work with a lot of institutional money managers who are either sponsoring commingled vehicles or investing in those vehicles. And in many cases, whether you're a pension plan who has to pay out liabilities to teachers and police and fire, or a longer-term investor like a sovereign wealth fund, the answer can be very, very different, right? So, there's a lot of sectors that could be impacted or could not, but again, it goes back to the investor's outcome that they're seeking, which can vary depending upon the ultimate underlying investor's objectives, goals, or and in the case of a sovereign wealth, a sovereign.
Jay, there seems to be a view out there that the second the UK signs a deal with the EU, all of this animal spirits are going to be unleashed and investment's going to, really flood back into the country again, namely because of the, well, not as much as before, but the cheapness of the currency. Do you see that? Do you see some latent demand sitting on the sidelines waiting for a deal to get secured so that money can come pouring back into UK real estate again? Yeah,
I think what we're seeing is that, look, Brexit is real. There's also trade wars and everything else. These are real factors that investors need to consider. But increasingly, as I travel, and I'm in the midst of a 4-week trip. I was in Asia a couple of weeks ago. I've been on the ground here in Europe and in London for the better part of 2 weeks now. What we're finding is that other factors are really what investors are focusing on. Environmental, social, governance risks. These are real. These are not something that a far left people need to be worrying about. These are real factors. If you're investing hundreds of millions of pounds into properties in a portfolio of properties, you need to understand, am I exposed to flood risk in particular markets, whether it's Amsterdam or London, or does that differ from Miami to other markets? So what we're finding is that, yes, everyone's cautious with some of these geopolitical factors which are clearly in play here. But again, going back to earlier, many of them are worried about longer term outcomes that they need to achieve. And again, whether it's diversifying an economy or paying liability streams, and for them, they got to take into considerations as they construct portfolios. And in the case of real estate, because at MSCI we do this across a multitude of asset classes, but in the case of real estate was always going to remain a physical asset. It's always going to remain, a lot of transaction costs, longer term horizons. So again, that balance is really where they're looking for us to help.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.